Thank you so much for having us, Web3 Festival. Excited to be here moderating our panel on stablecoins, one of the most exciting topics this year. I'm going to go around and ask our panelists to each introduce themselves. I will start. I'm Amanda Cassett, founder and CEO of Serotonin. We bring the world's breakthrough technologies to market.
Hi, everyone. Good afternoon. I'm Rita, CEO of RD Technologies. We're one of the 3 companies that are in the sandbox for stablecoin regulation in Hong Kong under Hong Kong MA. And we also run our own stablecoin payment platform here in Hong Kong. Nice to meet you.
Good afternoon. My name is Yam Key. Nice to meet you all. My title is Vice President for Asia for Circle. We're the issuer of USDC, which is the largest regulated stablecoin in the world.
Great. Hello. My name is Dominic. I'm from Standard Chartered Bank. I'm the head of digital assets and fintech for Standard Chartered in Hong Kong. And I've also been managing our stablecoin project. We're in the same sandbox as RD. Thanks.
So I'll start out the conversation. Do you think that stablecoin payments are poised to overtake traditional payment systems like SWIFT and ACH? Is that something that we can expect soon? Do you want to start, Rita?
Sure. My answer is absolutely. It's just a matter of time. I just came from the other stage where I gave a keynote. So how we see this is there are 3 generations of payments, the evolution of cross-border payment. Payment 1.0, which is based on purely correspondence banking and SWIFT. And payment 2.0 is fintech solutions where these fintech companies have their own liquidity pools, and so they use the liquidity pools, the money pools, the licenses everywhere to facilitate faster settlement across borders. But the problem with that is it's capital intensive, it's walled gardens, the liquidity is not democratized. So payment 3.0 is based on tokenized money, based on stablecoin. That's actually the original goal, right, of Satoshi, which is a peer-to-peer global payment system, right? So stablecoin is actually realizing that original vision. So the beauty of that is the information flow and money flow, fund flow comes together. So that's why it's superior than traditional rails. So we believe it's actively happening, this new payment 3.0 based on stablecoin, and we believe it's a matter of time. It will take over. Now I will stop here, but I think there is a difference between cross-border payment and local payment, because you also mentioned ACH. That's more probably referring to local payment. That's something different. But I'll stop here.
What do you think, Yam?
So I really like Rita's framing, and you can tell you're in a payments and finance panel when people talk about liquidity. And the beautiful thing about this is that there is finance and there is technology, and this is where it comes together. So along those lines, maybe I'll bring the technology lens to it. The technology lens to this different versions of payments iteration. In the first one, the technology is around these old rails with a really poorly designed UX. You have to go and send an email to your bank. Actually, before then, you have to probably call them up or maybe fill out some forms. And in the
send a fax.
Send a fax. 2 signatures perhaps.
Wait, call the notary.
Or call a notary. That's right. And you're going way back. And in the first version of fintech, it was really the same rail with a better UX. So they got rid of that horrible experience, but the underneath movement of funds, forget about liquidity. I mean, that's more of the payment side, but in the experience, the technology side, it was awful. Right? You would be able to still use a Venmo or a Cash App or something else, but it would take a while for money to move. Or you have to download 5 different types of apps to do payments depending on which close network you're talking to. And this iteration of fintech really breaks away the underlying rail that moves money around. And because of the use of blockchains, it's really open to all. And the cost of merchant acquisitions essentially becomes 0. The cost of user acquisitions becomes 0. And I think it'll be really interesting to see what builds on top of that. From our experience at Circle, we've been around for a number of years. Since the inception of USDC, we've seen $25 trillion of on-chain transactions. And that includes everything from the digital asset trading to movement of funds that people use it for cross-border payments. So it is definitely coming and it's definitely growing.
And that 25 trillion, that's more than Visa and MasterCard combined, which is really fascinating. But someone's got to steelman the opposing position. Before I ask you the same question, Dominic, can't ACH and SWIFT just change their settings or update their technology in order to make the payments go faster? Can't they just adjust the prices that they charge? Is this just a matter of UX? Is it just a matter of innovator's dilemma? Or is there something core to the technology of stablecoins that makes them inherently better?
That's to me? Okay.
The bank.
The bank guy. Okay, well, look, it's a good question, and not one I thought about, but let me think about it now. So, look, I think one of the big differences here when you talk about, there's definitely things that that current payment giants can do to continue to pick up market share. There's, it's still a very networked and rich ecosystem. So, I think there are advantages that play for that model. But I think one of the big differences is actually in the panel we just had talking about tokenization and RWA. So no matter how you use fiat, it does not solve for your settlement or your purchase or payment of tokenized assets. Going and selling a bunch of tokenized bonds and settling them with fiat actually doesn't solve your problem. So I think the more we do see tokenization of RWA, the more we see the need for tokenized money to make that payment, to go across that same rail. So that is something different. That is something new. That is something that incumbents will have to solve for by either new technology, new business models, things like stablecoins. That's not just a small pivot in an existing business model. And that's probably something that I think is quite exciting here in Hong Kong. Obviously, we've seen the interest around tokenized RWA. I think it's a huge use case for tokenized local currency as well as US dollar.
So if I can jump in, thank you, Dominic. So I think there are a few sort of layers of answer, right, to that question. First of all, there's definitely technical or technology superiority when it comes to tokenized money, sort of money movement, because it's a public ledger, right? So if you look at correspondence banking, what is it? It's basically private ledger settlement, right? So bank to bank, you need to open nostril, vostro account with each other, and you need to have all these relationships in place. That's why banks in emerging markets get less and less correspondence banking relationship, because the bigger banks are de-risking, right? So they don't have those relationships. Then when you don't have the relationships, you cannot settle with each other. But on public ledger, you can settle whenever as long as you have a blockchain address. So it's definitely superior. It has a technological superiority over traditional rails. And now, when it comes to ACH, something like domestic rails, I do think over the past years or decades, fintechs have been trying to make it better, right? And also in the traditional world, like for example, I spent lots of time in Europe. Open banking really changed the landscape of how fintechs, where all the companies can access banking data and the information and funds. So things are moving in the traditional world as well. But whenever something revolutionary happens, right, the incumbents move slower than the new entrants, right? So that's also another way of looking at this. Just to my few cents.
I think what you're alluding to, Rita, is a bit of what was discussed by He Yi early on. It's a bit of a governance problem, and there's this tension between those who have the power and control and those who are trying to challenge those who have power and control. And in the case of the local payment rails, the regulators domestically have a lot of say. And we've seen enormous amount of innovation at the local level, especially in Asia, be it within China, be it here in Hong Kong, be it in Singapore, India with UPI, etc. But the challenge became the integration across these different jurisdictions, right? Where you talked about cross-border payments being the real area where stablecoin become useful, and that's what we see as well, where essentially you've got these different local rails that can pay out real time. But take the case of Singapore. Singapore negotiates with India for UPI to pay now. Singapore negotiates with Thailand for pay now with prompt pay. But that doesn't mean that UPI can integrate with prompt pay. And you have to do these MOUs. You've got to do the commercial agreements. You got to go then get the integration done. And it's a end to the end problem. And when you're trying to solve that in a lot of different places, it becomes really hard. SWIFT is still in existence because people have come to that standard. However, changing that standard requires all these players to come back together and agree on a new economic model. And I think they're struggling to do that.
So there's an element of innovator's dilemma here, the old school system just not moving fast enough, even though they technically could. And there's also a technology breakthrough, which is this shared ledger that's immutable, that everyone can have access, that lets us operate in a zero trust environment if we had to, if we wanted to.
Ledger and compute, right? And that I think people miss the part about blockchains, especially Ethereum on, right? If Bitcoin was blockchain 1.0, Ethereum was 2.0. It's that compute that brought in a whole lot of information.
Programmability.
Programmability, yeah.
Great. So moving on, we have a notable stablecoin issuer on our panel, but there are also other stablecoins out there. I'm curious what each of you would define as the characteristics of a trustworthy stablecoin. Does it have to be 100% backed or over-collateralized? Are there any decentralized or novel mechanisms for building a stablecoin that are capturing your interest? Maybe Dominic, we'll start with you.
Yeah, sure. Look, I don't think it requires over-collateralization or it needs to be that formulaic. I think there's kind of different ways to get there. I think the key being, there's some kind of key thematics or tenets, though, that are required, and I think transparency obviously is one. I think that a tightly managed reserve from a credit risk, counterparty credit risk, from a market risk perspective, all key attributes. And I think if you kind of follow that thinking, there's different ways to apply that. We're very focused, obviously, on fiat. That's what's happening here in Hong Kong. I'm not an expert in some of the algorithmic backed stablecoins and some of the work that's being done there. I think it's very interesting. You mentioned interesting. I think a lot of stuff that's happening is innovative and interesting. I don't know, or I don't feel that right now. I haven't seen anything that I would say that's the equivalent of tokenized money. And that's, I think, what we're trying to solve for here. Right now, the track records are still a little bit out. We still see problems with fiat-backed stablecoins, right? There's still risk there. So I don't know if any of those are ready, some of the more alternative structures, but I think they are interesting. I think there's a lot of smart people spending a lot of time on some of these different structures. We'll continue to monitor and watch, but as for right now, the main focus is on fiat. I think that, to kind of get that cash equivalent, this seems like the simplest solution. And I don't know, it seems like many years now of looking at different problems, usually the simple problem that works seems to win. And so far, I've seen a lot of complex solutions that don't seem to be quite fit the need as much. So as long as it stays within that, I think fiat probably has a bit of an edge. Of course, I'm sure in a year or two from now, I'll be saying, why did I say that? But that is my view right now, yeah.
Yeah, I'm curious. You prefer the decentralized stablecoins, right?
I would say that we thought about this problem quite a bit, and we've built a company around it. And what we've seen, what we've discerned to be the safest in the way we've structured it is a 101 back, and it's a little more than 101, so it is a little bit over-collateralized. And we do that in a way that any other financial institution is structured, that there's a capital risk framework in place. When we look around the world in terms of what regulations are in place, what's permitted here in Hong Kong, but also in Japan, in Europe, what's emerging in the United States, in Dubai, elsewhere, they tend to focus on fiat reference stablecoins, and there are also very clear guidance around what the reserve holdings look like in terms of high quality liquid assets, short-term duration, ideally same denomination, as what your issued stablecoin is, so there's no currency risk built into the reserves. And then there are trust but verify. So the requirements around attestations at least at a monthly level, if not more frequently, and then an annual audit. I think that sets a pretty high bar around the transparency and necessary protections around a tokenized cash is how we think about it.
Yeah, so I am someone you would call a stablecoin maximalist. So I love all kinds of innovations in the space. So I think it's just the community's effort to find the best the best solution for money on chain, right? So but I think it depends on the different use cases. So here in Hong Kong, we're really like at RD, we're really talking about how to move the traditional volume, payment volume, the traditional players into the space. I use this number a lot. So Hong Kong's B2B payment volume last year was more than 1.2 trillion US dollar, right? So to move, and most of that is traditional cross-border payment, cross-border trade-related payment. To move those volume into our space, you need a more, understandable, more like approachable, accessible, trustworthy option, right? So that's why in Hong Kong the regulation is very focused on fiat referenced stablecoin, so FRS. So it's fiat-backed stablecoin, and because it's easier to understand, and it's very much with the regulators' blessing, it's very much easily acceptable for traditional players, and that's what we're seeing happening, right? All these traditional payment companies, merchants, exporters, importers, actively moving into the space because it's something they can understand. It's something they can clearly see the value of. So I think I would say, FRS, fiat reference stablecoin is our focus as well. But other stuff, algo, or oil backed, gold backed, I think it's all interesting innovation. Yeah.
So each of you mentioned some of the risks associated with different kinds of stablecoins. We've recently seen some of these actually come into play. First, digital USD depegged recently, following some insolvency allegations. So curious what kinds of lessons you glean from what happened there, and how you see that affecting regulators and showcasing the risks that are present in the space. I don't know which of you prefers to start. You want to start, Dominic?
Seems to be looking down here, so I guess...
You're always in the hot seat.
I guess I'll start. I mean, look, I don't know anything about it beyond, I read about it as well, like all of us. I don't have any other insights beyond what I've read. But when I did see it, I think one thing that was quite interesting in going through the sandbox process currently, it is a transparency issue, right? I mean, usually when kind of market noise creates market shocks, it's because people have concerns and somebody comes out and calls out a concern that resonates with investors, right? And I think the key is to ensure that you have that level of transparency. You are reporting, often. You have audited reserves, so that that noise doesn't kind of hit that tipping point. Or if there is some type of allegation, the view is then let's judge the credibility of the players. These guys seem to have done all these right things. And I don't know, that was what probably resonated the most with me when I first read about this, is just the importance of that transparency, and kind of, that being probably the key thing to at least stabbing off these type of similar issues.
I would say three things. Number one is definitely transparency around reserves. So that's been said. The second piece is the need for regulation. I think it's a reminder that there are exposures by retail, by others in this space that deserves a proper view. And I hope that the regulators in Hong Kong and the policymakers do not feel deterred, but instead feel that this is actually the right moment to keep moving forward in its regulation. And then the third and the last piece is we have to understand the difference between redemption on the primary market and pricing on the secondary market. And this is something that I think, because we're in the crypto space, people tend to confuse the two. And one, the redemption is the ability of the issuer to be able to pay back at par, which is what the law requires, what the pricing is, or pay back what the token is worth. The second piece is around the secondary pricing. And the secondary pricing is a bid-ask. It's a supply-demand. And there's a lot of different things that determines that, which the issuer may not control.
Yeah, absolutely. That one is key. And I would add on top, actually, there's a difference between allegation versus actual depegging, right? So that's two things as well. So I think, so just to echo, I think why we need regulation, because, this industry is obligation or responsibility is bigger and bigger, right? We're looking at $200 billion sort of market cap, so it's becoming more and more important in financial systems. So regulation adds one more layer of credibility and trustworthiness. So that's why we need regulation. And I think so the native liquidity is actually super key. I think in the primary liquidity is super key in terms of during time of uncertainty or during allegation and all that. So this is also a test, I think, on stablecoin issuers.
So we've all mentioned regulation now. We've recently seen the Stable Act and the Genius Act in the U.S. Really remarkable that they always have bills that follow such nice acronyms. What a coincidence. We've also seen some very forward-thinking steps on the stablecoins front in Hong Kong. For each of you, what are the big regulatory milestones that you're looking at that people in the audience should set an alert for that are going to be catalysts for stablecoins growing even further? What are you watching out for, Rita?
Yeah, so in Hong Kong, as you know, last year in July, the Hong Kong MA announced a stablecoin sandbox, and there were 3 companies that were admitted into the sandbox. So RD is one of them, and we're actively working with the regulator on, preparing for hopefully a trial before licensing. So that's one milestone. So sandbox trial, and second milestone, of course, is the legislation, which is actively happening in process, and everyone is hoping for faster, regulation. But let's see, we have big hope for this year. So I think in Hong Kong, we are also, at RD, we are very much looking forward to this stablecoin to do what we are mostly, focused on, which is the 1.2 trillion B2B payment flow in Hong Kong. With the stablecoin, it will really unlock a lot of those opportunities of moving TradFi volume into stablecoin and achieve faster and cheaper cross-border payment.
I would say that there's progress all across the world. Just 2 weeks ago, we were able to launch USDC in Japan. We're the first and only stablecoin that's available in Japan at the moment. Here in Hong Kong, there's the law that's moving through LegCo, and there's a legislative process. Singapore is expected to also roll out or put on before its parliament its bill sometime this year, likely after their election. Europe already has a bill has a law under MiCA, which we're in compliance with. The UK has been debating. They're trying to figure out what to do. There's a broader politics questions there. And then the US, quite a bit of progress. Both the House Financial Services Committee as well as the Senate Banking Committee have each individually, separately passed their version of the bill. There's a reconciliation process. I think the takeaway here really is that the laws are coming. This is not an if question, but a when. And then the next sort of iteration is harmonization, or at least some sort of recognition, if not reciprocity, across these different jurisdictions. And that's going to be key if we want to see how this interoperates globally.
Yeah, so I think to build on top of that, I think stablecoin regulations will become just more and more localized. That's just generally the trend we see, and that does have implications on how stablecoins from different jurisdictions will operate or will be offered in the specific jurisdiction, and that's a quite interesting area to watch as well.
Okay. Well, I think we've answered most of the regulations that are coming up. I guess, for us, outside of the main regulations that we've all discussed and kind of the need for a global framework to, really power the kind of cross-border use cases, which are key for stablecoins. There's like a number of other kind of more, I guess, ancillary regulations that we're kind of waiting around to see how those unfold. Like Basel capital treatment for cryptocurrency, super important. If you want institutional use cases by different AIs, there's some tax treatment that's still being sorted out around tokenized assets generally, which will have an impact on use cases. I mean, there's some of these kind of ancillary pieces. I think even, Hashkey would know better if somebody was here, but even the SFC's coin acceptance framework, there's some stuff being solidified there to enable stable coins. So I think you kind of need all these little building blocks to fall in place. And I think as those do, that's when you start to see that scale. So outside of the main regulations, those are a few offhand that I think will help drive adoption.
So Yam mentioned the Japan stablecoin that's been launched. Of course, that's a USD pegged stablecoin. So I wanted to ask the panel this question, and obviously Rita, you're working on a Hong Kong dollar pegged stablecoin. So I'm curious, do you see blockchains and stablecoins really becoming a transport layer for the US dollar? For me, coming from early crypto, working on Ethereum project, we always thought that people would start paying for their coffee or pizza back in the day in a floating cryptocurrency. It's turned out that arguably the most product market fit use case for crypto has been these stablecoins, overwhelmingly USD pegged stablecoins, overwhelmingly centralized ones that basically use the blockchain as a transport layer, but don't actually use all of its features, let's say. Do you think that the blockchain is mostly going to transport this US dollar and lead to more US dollar dominance? Or do you think we're going to end up in a world where lots of different currencies have their own stablecoins?
I'll start. That's an interesting question, and like everyone has their own sort of imagination of the end game for stablecoin, right? Like I was just recently talking to someone, and we were talking about what's the end game, and I think I don't think it's what you described. I think it's ultimately we are moving money on chain. So that we have this on-chain world that where things can become more efficient and effective, also through the other stuff in digital asset, right? But I think when it comes to stablecoin, it's an evolving situation. Like we talked about why US dollar denominated stablecoin has been very much adopted, especially in emerging markets, because in those markets. For a long time, it has been hard for the local consumers and businesses to access dollar, right? And so that's like a way for them to access dollar. But I think as stablecoin regulation and use cases become more and more localized, I think there will definitely be other currency pegged stablecoin becoming more and more popular, and also maybe other branded stablecoins as well. That's one thing I think will happen too. So in Hong Kong, actually, the stablecoin regulation is a currency agnostic. So Hong Kong stablecoin doesn't equal Hong Kong dollar stablecoin. So where all the stablecoin issuers in the sandbox are starting with the Hong Kong dollar one, because it's the right thing to do, right? But I was just talking about this on the other stage. I think a CNH pegged stablecoin is super interesting. Under Hong Kong's regulation, it will become a very meaningful tool. As China's export in the past years has becoming more and more focused on emerging markets, and lots of more and more of those trades are priced in RMB. And for the exporters and importers, if they can receive CNH stablecoin back, which is much more efficient and cheaper than traditional rails, and avoid that extra conversion of FX, they would definitely choose that tool, right? And also, Hong Kong is a very important, one of the biggest CNH settlement center, and the deposit of CNH here just reached the new high. So I think this could be very interesting, and for the use cases we'll talk about, from global payment, cross-border payment related to trade. From there, and this could expand to people holding more CNY denominated assets as well here in Hong Kong. So I think it will be very meaningful, and this is something that we'll be closely watching what would unfold as well.
What about you two? Do you think US dollar dominance in stablecoins is on the rise or will fall?
So, I mean, I don't know. I guess the way I look at it is, I mean, right now, FX markets, trade markets are all predominantly priced in US dollars. That's the way the traditional markets work currently. Stablecoin markets are a little lopsided, right? I mean, they are pretty much 99.9% US dollar. So I think what you probably end up having is you probably having a stablecoin market that starts to reflect a little bit more what the global markets currently look like. I think that we're obviously supporting local currency thesis for our business model. So I mean, we're a little bit axed, but we believe that there are strong use cases for these individual local currency stable coins. And actually, by having U.S. dollar stable coins, bigger rail, and a bunch of high quality, trusted, regulated local currency stable coins, you can actually build a very interesting kind of market dynamic.
I guess just to ask you, what is the use case? Why is it better for a small market cap local currency to tokenize as a stablecoin as opposed to just using a USD pegged stablecoin? Like, what's the reason?
Yeah, sure. So, well, first of all, people do have Hong Kong dollars, right? So people use Hong Kong dollars. The license is not just about, we spent a lot of time today talking about institutional, but the reality is that the license allows for retail use cases as well. And this is, I believe, to be a retail tool also. It's not just about, mass, large blocks of money being moved. In fact, some of the other types of tokenized money can do that just as well. I think that some of the decentralized, smaller retail use cases are very interesting. It gives tools to people that can make a difference for SMEs, for people using these stablecoins for payments, for tokenizing, paying for tokenized RWA, which we've already talked about. So, since people do have local currency dollars, I think there are plenty of inter-country use cases that can support moderate-sized stablecoins. Maybe not everybody gets to be huge, but you can still have a very healthy business model, we think. And we also believe that not every currency probably requires a stablecoin. Let's be frank. But top traded currencies, I mean, Hong Kong's only somewhere in the top 10, depending on year. There's some international use cases that we think make a lot of sense for a Hong Kong dollar stablecoin to back up to another international stablecoin.
So when it comes to Hong Kong dollar, right? So Hong Kong dollar is pegged to US dollar anyway, so it's a stablecoin of a stablecoin. So and also in Hong Kong, so the deposit has always been half Hong Kong dollar and US dollar. So there, for local use cases, we do see a need for the local consumers and businesses to hold maybe the stablecoin that's denominated in the local currency. The same goes with UAE, right? So their currency is also pegged to US dollar, and they already have a local currency pegged to stablecoin regulation, and there are already people who are issuing it. So I think there's definitely local use cases that. Yeah.
I'll also bring back the point we made earlier around programmability. Stablecoins, just at a technology level, it's a better form of money. There are things that you can do with stablecoin, with logic, with conditionality that you cannot do with the best form of non-blockchain based digital money today. So I think that will be one reason. The other is that we do think that there will be.
Sorry, one reason why there will be more non-USD ones, there will be
exactly. There's a case for all currencies to be in a better digital form, which is a stablecoin version. It doesn't have to be dollar denominated. And then the other piece is that we do expect many more different stablecoins to be available, and it should be in different currency. I think this is where I would kind of go back to what Rita mentioned at the beginning of the conversation. There is what is created, and then there is where the liquidity is, and that's the other piece to get us solve for. Where who are the main payers and takers of a currency? And at the moment, U.S. dollar, for the time being, remains the world's reserve currency. When we look at trade settlements in Asia, 75% of trade receipts in Asia is denominated in the dollar, and that includes trade from China. So when you remove that, it's probably much higher when you walk into any sort of import-exporter offices around the world here. But I do think that there is a need for local stables, and there will be a market for that.
Is Circle's perspective that it wants to just dominate that USD stablecoin market and the US use case? Maybe you can, you're running Asia for Circle, so maybe you can speak to that strategy a bit. I know Circle's in the spotlight right now with the IPO just announced.
So as you mentioned, we filed an S1 with the SEC, and with that, we're in the SEC mandated quiet period. So I won't comment on that. But what I'm trying to do is really build the business around the world, but specifically here in Asia for Circle. And there is a need for cross-border payments, as we have discussed, at this panel. There is so much money that moves in and out of these capital hubs, trading hubs, where there are normal trade that's happening, and people want to be able to settle their trades faster, quicker, cheaper. And I think stablecoin has a role to play there.
Yeah, I think so. So I think in terms of global trade, the number is changing, but that's why I say this is evolving situation, and I think as we don't have so much time left, I think issuers are important. We're one of the issuers in the sandbox as well. But I think when it comes to going back to Yamke's point about liquidity, right? Ultimately, this game is also about distribution, right? We're seeing it's sort of like the industry is all shaping a new Visa, MasterCard, if you will, for the industry, where you have different issuers, different acceptance partners trying to distribute and find the use cases for different stablecoins. So I think distribution is key, and I think that's also actively changing in the market. And that's why, just a little bit of advertising, RD is running our own stablecoin payment platform in Hong Kong. So, and we're very focused on the distribution side as well.
Fabulous. So I'll direct one last question, starting with Dominic. We're at Web3 Festival. Web3 is more than just stablecoins. Do you think that looking back on stablecoins, maybe and crypto, maybe in a decade, that we'll feel that stablecoins was the ultimate crypto use case, or do you think there will be others? Will we look back and think that all of this crypto and blockchain stuff was really just a run up to stablecoins?
That's a good question. I think I would say that right now, I definitely see stablecoins as integral to the next stage of the digital asset evolution. And I say that now, but the reality is I think it's been quite core to a lot of the journey. I mean, if you look back to crypto trading, 8 years ago, 9 years ago, whatever, I mean, you really saw stablecoins were a bit of that flywheel that increased trading in crypto. Now stablecoins are being kind of aimed at payments, and that's kind of what everybody's talking about. I think, as I said before, I think that in the next year or two, to really get RWA flowing and that to be a real opportunity, you're going to see stablecoins pointed at that. And I think that will continue on. I think stablecoins will stay an enabler, or other types of tokenized cash as they develop will be an enabler of the entire kind of journey. So will they be the big use case? Maybe not, but will they be an enabler? Probably for a long time, I would say yes.
So aside from being a finance person, I'm a technologist, and I will draw reference to the early web adoption, where in each of these cycles, there are certain things that has to happen, and there is a quote-unquote killer use case for that period of time, and then there are more that will build. And in the Web 1, that was probably email and websites. And then in Web 2, we got to search engines and apps, etc. So I would say that stablecoin is one of those really critical components, but it's not going to be the only one.
Yeah, I agree. I think it's a winding road to the future. I'm hopeful. I think, ultimately we'll get to that space, maybe, crypto is actually changing reconstructing ownership, trust, and all that. So I think we'll get there. It's just a winding road. Where you solve the pain points the most will get adopted first, right? So when it comes to cross-border payment, it has been painful for everyone for too many years, and so that's probably being adopted in the format of stablecoin as a first step. But there are many other things that have been sort of primed for disruptions, such as capital market. Yesterday, Lily was talking about internet capital market, and that's also something like a people would want to see crypto can change for better, right? So it's a winding road, and I'm hopeful that with every step of the way, the innovation will make things better for the specific use cases, and we'll get to the ultimate vision.
So stablecoins may or may not be crypto's killer use case. This may or may not have been the most important panel at Web3 Festival. Thank you so much to our panelists for joining me and our hosts for having us. Thanks, everyone.
Thank you.